I will go through disclaimers quickly. Results here are provided for general informational purposes as a convenience to the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. This is not a solicitation to buy or sell any security ever. This is not advice, and past performance is not necessarily indicative of future results. That is all that I have. So I'm going to turn it over to Max.
Sometimes you're going to get an alert that not only has technical open conditions on this back test for XLU, for example, an old trade from one of the really good contributors to the community, yet another Dave. You want to follow him for sure. We have many good traders in the community, but yet another Dave is right there at the top. So this XLU trade, which is a bullish trade, going to be a long diagonal, but we're not really concerned about the option trade. We're going to focus on the open and closed conditions. You'll see a whole bunch of open conditions. This trade's been updated, by the way, so don't worry about copying it down. And it's in the community today, so you can get it from yet another Dave there. And most alerts will have technical open conditions, and they all have to hold. It's RSA 14 greater than 48 and MACD 12, EMA 26 greater than EMA 9, and kurtosis 1 year less than 0. But sometimes you'll have some technical close conditions that you will find either at the bottom of the back test page for that specific alert and back test. In this case, RSI 14 greater than 60, stock greater than the SMA 50, and the AV WAP 30-day is less than the price of the stock. Now, close conditions. It's the RSI 14 greater than 60. Stock is now greater than the SMA 50. The AV WAP 30-day is less than the stock. Now, I don't know about you, but once I put this trade on, or a trade like this, I'm not, even if I write it down, I'm probably not going to refer to it very often to see if any of these closing conditions are holding. But what you can do is set up a closing alert in TradeMachine, which we'll do in a second. The other thing I want to just highlight is if you scroll down below the technical open conditions, you can look at the technical close conditions right here as well by just clicking on close trade when, technical close, and there they are. RSI 14 above 60, stock above the SMA 50, and the AV WAP. All right, so you can find those technical close conditions in more than one place. It's going to rerun the back test very quickly, all right? But let's say I just want to set an alert for the first one. You can set alerts for all three. I would do it if I was taking the trade, but just so we don't spend a lot of time, I'm just going to do the RSI 14 greater than 60. So I want to get to the alerts tab. I want to keep this tab open, so let's go to a copy of the Today tab. So let's just take one of them and go to the Alerts tab, which you can get from several of the other tabs of TradeMachine. And we are going to do that RSI greater than 60. So we'll put the ticker in. It is XLU. And now we're going to look at the alert type. And we don't want days before earnings. We want a technical alert. So we click technicals in this box, and then we set the technicals down here. So I click on set technicals and look down, and we want the RSI, and we want the RSI 14. You can set that. We want it above 60. And let's just assume that was the only technical close condition. I can then save it there. Okay, we see it on an alert for XLU, RSI 14 above 60, and then I will click Add Alert, and ticker is XLU alert created. And I can double check that it's there by clicking on this box and just putting XLU, and indeed you'll see this alert created RSI 14 is above 60. And of course, I did want to enter a note, so let me quickly just do it again. And we'll do technicals, and we'll do set technicals, add the technical indicator, and RSI 14 above 60, and hit save. And now that's the closing condition that TradeMachine every day will test for us. And to help us remember what this is related to, it's XLU from YAD, yet another Dave, and it's a long call diagonal, and RSI 14 is now above 60, close trade. So now I know what this alert is all about. Now I will add the alert. That's, I don't know who's outside calling for me, but they know I'm not available until 3 o'clock New York time. We'll go back in here, XLU, to make sure that alert was created, and there it is. And now we have the note that I just entered, which is XLU from YAD, yet another Dave, long call diagonal. Side 14 is now above 60, close trade. So that's the very easy way to set a closing condition or multiple closing conditions and let TradeMachine do the work every day and test for it while you're looking at more important things.
Additionally, one thing to note is that with the close trade win settings, if you are looking at closing based on a specific calendar date, close trade win uses trading days. Days to expiration, for example, functions as calendar days, and days after earnings also function as calendar days. However, if you're looking at close trade win, it is using trading days.
Right. And if you can see my screen, I've scrolled down for the specific back test. Close trade when, after open, a specific number that you enter of trading days right there that Amanda was just speaking about. Let's go back to the Today tab. One of the other things that came up yesterday in the community was the desire for more bearish potential trades. And I just want to highlight two. One is bearish burst, which is a bearish trade, hence the name. And the other one has bearish components, and that would be the long strangle technical, where you're buying both of, I believe the default is a 40 delta put and a 40 delta call. You're basically buying volatility because you think there's going to be a big move. You're not sure which direction, but this is both a bearish and a bullish trade, the long strangle technical. And here's an example of that back to the bearish burst. And you'll see that the opening technical conditions are the stock has gone below the SMA 200. Yesterday it was above. The stock is also below the SMA 50. And we want to make sure it's not oversold yet. So we have this RSI 20 is still above 30. And then the option trade is to, for 14 DTE, is to buy puts out of the money put. The default is the 40 delta. So very simple trade, straightforward opening conditions, all bearish. But we want to make sure the last one, the RSI 20, is not too bearish. We want to make sure there's still room for it to go down. So those were the two things that I wanted to highlight.
All right. Can you layer the AI on top of your own technical criteria? The word that starts with K, I have seen in other videos. So the word you're referring to is kurtosis.
Right.
And Max, would you like to give an example of layering on AI with your
Sure.
own technical criteria?
Certainly. So let's go back. We have this ego long put, bearish burst. And let me just move my little chat out of the way. So these are the current technical open conditions for it to get on the Today tab. These are the technical open conditions. Then there are some other conditions in order to get on the Today tab that we've discussed in the past. So I'm going to go down to technical open, and I can add, he says, all right, I'm going to add, since this is a bearish trade, I would like, now there's kurtosis 1 year and kurtosis 6 months. Most of the work that's been done has been on kurtosis 1 year, so that's the one I'm going to select. And so I've added a new additional technical open condition. And in the last year, the kurtosis, which is also called the tailedness of the stock returns. Since it's a bearish trade, we'd like to see kurtosis 1 year below 0. So there's my new condition. I save it, and backtester will automatically rerun the backtest. And guess what? The backtest now doesn't like this trade. So if the kurtosis is less than 0, it's a failed trade. Lucky for us, the kurtosis 1 year, the current condition in the box right here is a positive number. But the point of the exercise was to show how to add a technical open condition. But that's a way to add anything you like, whether it be kurtosis, skewness, or any of the other conditions. Sometimes people add RSI above 70, or they're testing for RSI below 30 because they don't want it too overbought or too oversold. That's how you add any of these conditions that you like in addition to what your alert already has or someone else's alert has. And then if you don't like it, you just delete it and it'll rerun the back test without it there. And those are the original bearish burst conditions. Okay.
Perfect. Could we take a look at the current guild spread the sell-off setup? I have a GTC order in for a 60-cent credit. I was wondering if it's the credit max loss ratio that is most important, assuming the deltas are reasonably close to 37, 25, and 10.
Okay. Well, let's try and do that. So let us it's no longer on the Today tab. I'm 99% sure. So we'll just build it. So we want spread the sell-off with AI soon.
Yes, spread the sell-off is always AI.
Right.
Yes.
It is now. And it'll do it by default for Amazon, but we're going to just to load up the strategy. We are going to do, he or she wants to do guild.
Yeah. GILD.
GILD. All right. And of course, Amanda is just waiting to correct me because I must have the end date be the current date.
I've done that about 10 times today.
Okay. So you'll see that besides either the options expire, there is an 80% profit limit on this trade. If you scroll down and look at gains above 80%, close when, that's where that comes from. So we'll go back to the top. And so we're looking at 80% of whatever was collected, all right, of the credit collected for the entire trade. Let's say it was $1. When you can buy the 1x3x2 back for 20 cents, you've made 80% of the credit and can close that trade. Now, what was the other part of the question, Amanda?
If it's the credit max loss ratio, that is the most important thing, assuming the deltas are reasonably close to 37, 25, 10.
Yeah.
That was the total question.
Okay. So I guess what the person is saying is we put it on at 37, 25, 10. It's remained close to that. Once again, we put it on for a $2 credit.
Well, they specify that they have an order in for a 60-cent credit.
Okay, so let's assume
helps.
let's assume the 60-cent credit gives them their 80% profit limit. And if it's a GTC, good till canceled, order to buy back the guild option spread, which is long 137 delta put, short 325 delta puts, and long 2 10 delta puts. if that unbalanced butterfly is worth 60 cents because they put it on for $3 credit, then that trade, that GTC trade will be executed and they will close the trade at that 80% limit. Now, if the 60 cents stands for something other than the 80% of the credit, then you can decide not to wait for 80%. I I don't know the details um, of when the trade was put on, what the exact credit was, but if it's at 80% based on that closing trade order, then the trade was put on for approximately a $3 credit.
Perfect. Hi, Max. I have some experience with TradeMachine, but it hasn't amounted to much, probably because my time spent with it has been very inconsistent. I am retired now, ready to put work in, and suspect what you are doing could really help me. Could you please talk about a roadmap that could help me develop skill with TradeMachine? First time on the live session. Thank you. Well, thanks for joining us.
Yes, welcome. I would suggest the Learn tab. There are some excellent videos and articles. I would start, and they're all pretty short, and most of them are from some very competent people like Ophir and Jason, who's the CTO. And I would start with the getting started one and just let it go through, have your trade machine up and running next to it so you can figure out, see what they're talking about and what tab they're using, etc. But I would definitely start with getting started, new to trade machine strategies. Then when you get through those three categories, there's a whole bunch of articles that answer frequently asked questions. Join the Trade Machine community is fantastic. We have a whole bunch of experienced Trade Machine traders who not only comment on other people trades or help them answer by answering some questions, but also share, as you can see right here, a target potential trade. Share the actual link to the alert back test for you to look at it and analyze for yourself and see if you think it's a good trade and potentially ask Bekim a question. Well, this is what's holding me up from taking the trade. Have you looked at this? What do you think about this? So first would be the Learn tab videos. Second would be getting community. Ask any questions that you want. I'm there during the trading day, plus other times when I have nothing better to do. But I do enjoy this, so I try and pay attention even on the weekends. I will pass through and see if anybody has any questions. Community is a great place to be, and don't be afraid to ask questions. Now, if it's 3:45 and everybody's trying to get their trades on in the last 15 minutes, you may have to wait a while to get an answer to a question. But during the day, before the trading day even starts, I'll be checking. I usually check to see if there are any questions. So the Learn tab, the community, and then, go to the Today tab. Make sure you understand the different strategies that are on the Today tab. Start with a simple one, a buy the dip, a bullish burst, a bearish burst, and we can get into the more complicated ones. So those are the three things I focus on first.
Yeah, I would agree with everything that Max just said. I think number one is community. I wholeheartedly believe that that is the best place for you to jump in, get started, really get your feet wet in seeing what other people are successful with, what other people have struggled with, beyond just specific trades. It also opens up to features of Trade Machine that maybe others have struggled with. So it's not just about specific trades, but it's really going to give you a deep dive into Trade Machine, and you have access to traders of all different skill levels. So we have some that are new-ish to Trade Machine, have been around for a while like you and are just really diving in. And then we have others like Max that have been here forever and have a lot of experience and success with TradeMachine. So definitely take advantage of those. I would also add you can tag any user in the community. So you can use the @ symbol and then start typing their name. So if, for example, you wanted to tag Max, you just start typing @chat Uncle Pops, and you can ask him a question. And I highly, highly recommend that. You can also tag anyone that's in the community. As Max said, also the Learn tab. And there are updates coming to the Learn tab very soon to make it easier to navigate, get you more content, more resources to really get you started. So that's coming very, very soon.
Now, Amanda, I thought you were going to also add what Ophir says. Well, one of the many things Ophir says, and that is you need a portfolio of different option trades. You don't just want to do selling put spreads every 2 weeks, for example. You want trades that are bearish. You want trades that are bullish. You want trades that are short volatility. You want trades that are long volatility. You want an assortment. You don't want to be too focused in any one kind of option trade. So that's one of the reasons why I like looking at the trades on the Today page, the Today tab, because it has that assortment right there. And you can pick and choose. And then as you put trades on, you'll see, oh man, I'm too long. I've got to put on some bearish trades, or oh, I have too much long volatility. I need to put some short volatility trades on.
Exactly. And Ophir actually has a very detailed video that solely talks about that idea. That's called What is Effort? And that would be something to be a great place to start, because he talks about having a portfolio of trades. So that is also another resource for you.
Yes.
All right, let's jump into the next one. It looks like the market's puked. Are we in a bearish period? The durable goods orders are terrible.
I think I mentioned this last Thursday night. You should take, if I offer an opinion on the market or a specific stock, Costanza it. If you are old enough to know the show Seinfeld, my thinking, my judgment on stocks and or the general market and where it's going are usually 100% wrong. So whatever I think, go the other way, and you'll be more successful than wrong. I could not tell you that 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 today's action indicates we're in a bearish market or not. I really don't know. I don't know that anybody really knows. It's one day, but that's another reason why you never want to be too long or too short. That's why you want that assortment, so you can't get hurt that badly. I mean, if I was, I haven't looked at the current market since about 145. It was only down, I don't know, a couple of tenths, maybe 2-3 tenths of a percent. But if it's gotten worse in the last hour, and I only had short put spreads in my portfolio of option trades, I would not be a happy person. You need that assortment. You need a little bit of everything. You never want to be too long deltas, too short deltas, too long volatility, too short volatility.
All right. What short exponential averages are used on backtests? The 8, 9, or 10 period.
You can use whatever one you want. So let us look at technical open conditions. If I'm if I if I'm understanding the question correctly.
You're understanding it as I'm understanding it.
Okay. So we're back on the bearish burst. But I can add whatever I like. In this case, for the bearish burst, it's a stock below the SMA 200. But I can go up here and click on stock price. So here's a new condition down here. And we want the stock to be below, for example, the EMA, I can put in any value I want. I can put in a 5 and it'll add a technical open condition that the stock must be below the EMA 5 days. What's the other part of the question? So you can select whatever EMA or SMA you like to the number. It's a daily EMA. TradeMachine uses daily data. All right. And you can go above, the stock can be above a moving average, the stock can be below a moving average, the stock can cross up through during the day a certain moving average, the stock can cross down through a certain moving average during the day. You can set any of those conditions that you like.
For spread the sell-off trades, do you have any rules that you adhere to when determining if you want to get into the trade?
Must put it on for credit. I don't want, this is just me personally now. I don't want, if my one long put spread, the 37.25 long put spread, let's say that's 5 points wide width of the strikes. I don't want my short put spreads, the 25-10 deltas. I don't want that wider than 10, twice as much of the width of my long put spread. So if my long put spread is 5, I don't want my two short put spreads to be 15 or 20. Too much risk. That's how I control risk on data entry. So I must put the trade on for a credit of at least $1, and I want the width of my short put spreads to be no more than twice the width of my one long put spreads. That's how I manage this red risk right here. All right. This is a payoff diagram for the 132. I always have it up for every Zoom because I always like to use it. We're putting the trade on for a credit. Here's where the 37 delta is. Here's where the 25 delta is. And all the way down here is our ultimate protection, our long to 10 delta puts. This maximum risk is composed of the width of those two short put spreads. Let's say they were 10 each. So that's 20 points of risk minus your credit of $1. So there's a 19 points of risk minus the width of the one long put spread, which in this example is 5 points. So we have 20 minus 1 minus 5. We still have 14 points of maximum risk. That's what I want to minimize. If each one of those short put spreads was 15, then my starting point here would be 30 points. And I'm subtracting 1 for the $1 credit and 5 for the one long put spread. Now my maximum risk is 24. It's a lot larger. I don't want that. So that's why I have my own personal condition. Besides putting the trade on for credit of $1, I don't want the width of my short put spreads to be wider than twice as much my one long put spread.
All right. I think you answered the next question too. Do you have a minimum credit on the 1x3x2?
Yes, I
Commission decent percent of gain on TOS if the credit is small.
dollar. Yeah, I think I've answered it.
Yep, I think so too.
Okay.
All right. I have noticed that sometimes these 1x3x2 trades can be closed for a credit. We insist on it. I have an ARM 1x3x2 for 3-1, which opened for $3.80 credit last Friday. I closed the PDS portion for another $1 credit. Theoretically, the trade should close at a 56-cent debit. Can you talk about how you work these trades?
I don't work them the way you just did. And this is, once again, this is my personal preference. The one long put spread is your prime protection against your maximum risk. Besides, if you take this off, the one long put spread off for $1 more than you put it on for. So now you said you had $3 and change credit. Now you have $4 and change credit. but this is still your maximum risk. I don't care if it's out of the money by a significant amount. I've been burnt in the past. Any experienced trader has been burnt by assuming if you are making an assumption, there's no way that this stock is going down past this point right here. I'm going to take in most of my credit that I have on the $3 and change and the extra dollar by closing this before I close my short put spreads. You're taking a risk and you don't have anything going for you. You wake up one morning and your stock is down another $20. You're sitting over here. And then you're going to try and roll this out and down. You're not going to be able to do it for a credit. You're going to be paying more. You're going to use up all your credit plus. It's not the way I trade. The only exception is if we're over here and the long put spread has achieved 90% of its potential value, minimum 90 to 95% of its maximum value. If I put this long put spread on and it was $5 wide, unless I can sell it for $4.50 and it has and it'll have minimal additional help for this maximum risk, I am not selling it to bring in an extra dollar. I'm only selling it because there's not much more to be gained by having it on. But I'll summarize this like this. If the stock goes down and it gets to the $25 delta short strikes that I have 3 of them on, one associated with the long put spread, 2 associated with the short put spreads. The first thing I'm going to do when I talked about it in detail on last Thursday night's Zoom, I will take one of my short put spreads that are $10 wide, and I will roll it out and down. I will roll it out 30 days in all likelihood until lower strikes. That's how you minimize your maximum risk, in my opinion. That's what you do first. And I just so happen to have an example of going out and down that I wanted to share. We have another couple of seconds. So I'm going to do new share and I'm going to go here, hopefully, and I'm going to share and I'm going to go to Apple. Oh, it looks like the markets came back. NASDAQ future is up 36 right now. All right. But that's not what I'm going to talk about. I'm using a hypothetical example of the Apple stock. And let me move this out of the way. And let's assume, it's a hypothetical example. Let's assume I'm short the 177, 172 and a half put spread. And I'm worried, even though Apple's up $1.62 today, I'm worried about this short put spread. So what I'm going to do, and right now it's worth about 66 cents. But I'm still concerned. I want to roll this out and down. So here's an example of out and down. We're in the March 15 strike. I'm going to go out a month or so. I'm going to go out to 52 days. And I want to go down to the 171. I want to go down to the 175, 170 put spread. I want to roll 177 and a half, 172 and a half in the March 15 expiration. And we're going to roll it to the April 19 expiration. And I'm going to buy back my March 15 short put spread. And I'm going to open a new short put spread by selling the 175, buying the 170. And I can do this whole thing for a 20-cent credit. Now, I'm not going to execute because I don't have, it's a hypothetical. I don't have the short side on the trade, but you can see that I rolled it out a month and I rolled it down 2.5 points. I've minimized the risk of that short put spread. That's how you roll out and down. Okay.
Perfect. Right. And the next one.
New chair. Let me go back to, okay, I guess it's this.
Next question is more of just a clarification of an earlier question. What short-term exponential averages do you guys use on charts? You mentioned it previously. I think I saw it on one of the videos I watched on TradeMachine. I thought you guys said it's typically the 8-day exponential moving average that is the most common in backtests. For longer term, you use simple moving average. Is that correct? So depending on the strategy, you're going to see a variety of different conditions, including different exponential or simple moving averages. In TradeMachine, the most commonly used for EMAs are 8, 10, 13, and 21. For simple, it's 50, 100, and 200 that are the most common.
50 and 200 right at the top of the list.
But
But it's really strategy dependent.
exactly. And you can edit that to be whatever your trading style reflects. Like if you want to look at, like Max said earlier, if you want to look at the 5-day exponential, then you can back test for that. It's very flexible for all of that. But put a closing order for a broken wing butterfly as a close when debit is, say, 20 cents and the BWB went to a credit of 50 cents overnight. Will the closing order work?
This is a question for your broker. Hopefully, I like to, when I have the time, and I not that I have the time every time, but every day I try to look at all of my GTC orders and see if they're going to be close to where the stock is trading pre-market. So if I see that the stock for the broken wing foot butterfly has rallied another $5, for example, hypothetically, and I do some quick math in my head, I might take that GTC for 20 cents and change it to $1 just to see how the market opens and if I'm going to get it or not. Now, if you don't do that, you have your 20-cent limit in. I don't know about the market makers for that specific stock, how generous they're going to be, or they're just going to take advantage of you and fill you with 20 cents, even though you could have got 50 cents or $1 additional credit. Some brokers insist that market makers be lenient in that case, and some don't care. But yeah, you try at the start of a day, before the start of the trading day. I like to look when I have the time and make sure that a GTC is still in line. Otherwise, I modify. But it could just come down to your trading software broker and the market makers behind that stock. I really appreciate everybody coming today.
Yes, thanks everybody for being here. We will be back on Thursday evening. So come prepared with your questions and we will see you then.
Right. Join us in community. It's the place to be.
Thank you, everybody. Have a good day.